Hello, everyone. I'm so excited to welcome you to another episode of my weekend series dedicated to the art of price action based technical analysis. In today's video, we are delving into the XAUUSD chart, navigating the potential opportunities amidst the recent recovery in US Treasury bond yields that might influence the upward momentum of gold prices. Last week's trading setup presented a great opportunity for us to capitalize on the bullish momentum with over 500 pips gained from multiple entries as the price of gold briefly surpassed the psychological $2,000 mark. Congratulations to those of us who joined in on this profitable journey. In fact, kudos to you guys. And if you've missed out on the daily commentaries that is scrolling on your screen right now and want to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. As we venture into the new week, we will be exploring whether gold can maintain its position above the $2,000 amidst a weaker US dollar to continue its positive traction. Well, in this episode, we will be dissecting the current market structure from both technical and fundamental perspective, utilizing tools such as trend lines, key levels, and chart patterns to unveil the potential trajectory of price action in the days ahead. But before we proceed, it is essential for me to emphasize that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the XAUUSD chart, enhancing your understanding of price action analysis. Always remember, Forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. With the groundwork laid and with no further ado, let's delve into the business. So as usual, we will be starting this week's analysis on the daily time frame, where I was able to identify a simple and insightful setup that will be the basis to guide our trading decision for this week. Now, the first thing I did on the daily time frame was to take into consideration the nature of price action since the month of April. That's historical data of about, let's say, 7 to 8, 9 months now. And I was able to come up with some important levels that will be guiding our decisions for the week. Though before I go into that, I was seeing something that looks more like a reversal pattern in the form of an head and shoulder pattern, which is not really that significant to the structure, but I will just want to show you to see what it looks like. So if we consider the impulsive bearish leg that started in the month of May, you will see how it formed transition into the left shoulder of an head and shoulder pattern. We have the head right here, and then we have the right shoulder formed in the last couple of weeks, where the neckline of this reversal pattern will be around this area, which interestingly shares a beautiful confluence with that $2,000 psychological level that price action has been oscillating around in the last couple of weeks now. So it's not really that important anyways. I just wanted to show you what things are looking like from this technical pattern formation. Now, in addition to that one are these levels I was able to spot here. In fact, I have 3 levels: the 1,935, the $2,005 level, and of course the $2,050 area, which happens to be the highest point price action has been for this week. Now, amidst these levels, the most important one that I will be using as my key level for this week is the 2,000 area. Now, if we go to as far back as the month of March, you will see how this level had played a major role in determining the direction of price action. Now, look at what happened here in the month of March. It was more of a selling niche before we begin to notice some consolidation phase that lasted about 2 to 3 months, as you will see here, before price finally broke down the $2005 level in the month of May. And since price broke down the $2005 level, you will see that price action had remained below the structure ever since then. An attempt to break out of the structure resumed again during the last week of the month of October, as you will see here, but it failed as that level was rejected again by sellers to push price to the downside. Then in the last week's trading session, we saw another attempt by the buyers to break out of that structure, but it was negated, and in fact we saw how price action closed around that area at the end of last week's trading session. Now, with this information we have gathered here, it is quite obvious that we are at a crucial juncture in this market right now. We are depending on how participant in the market reacts to this $2005 area at the beginning of the week will determine where our price is likely going to go. Then now the question going into the new week is, will the selling pressure persist below the structure, maybe to bring price back into the 1,935 level, which might dovetail to a minimum of 600 pips to catch there? Or are we going to be seeing price breaking out of the $2005 area, now making it a new platform for new highs in this market? So these are the things we are going to be looking at, and in fact, to guide our decisions for this week, I've been able to identify a simple setup on the lower time frame, which we will be using to guide our decisions going forward. However, before we go into the details on the lower time frame, it is important for us to take a quick look at the economic calendar to keep tabs with the fundamental factors that are likely going to be driving the market sentiment for this week. And for those of you who have been with me for a while now, you know how important checking the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So on the economic calendar for this week, and based on the asset we are looking at, we will be focusing on high impactful events from the United States economic docket. Now, the first event here is coming in on Wednesday, November 29, and that is the gross domestic product annualized for quarter 3. Then we're also going to be looking forward to the core personal consumption expenditure, which will be coming up on Thursday, November 30th. And then finally on Friday, we have two high impactful events, the ISM manufacturing PMI, and of course the first chairman will be speaking on that day as well. So you can see we have a handful of impactful events, and of course we do know that the anticipation of this event alone usually affect the market sentiment and will definitely reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I was able to identify a simple setup that we will be using to guide our decisions for this week. So you can see our key level still remains very much intact around the $2005 area, as you will see here. Now, in addition to this level, I was able to identify a trend line after taking into consideration the nature of price action in the last 2 weeks. Now you can see here that it is quite obvious that price action has been bullish, and with a uniform and consistent series of higher highs and higher lows, I was able to identify a range, let me call it an ascending channel, after connecting the series of higher lows, giving us the support line of that ascending channel, and then the connection of the series of higher highs, giving us the resistant line of that ascending channel. And of course, you know how we do it in this community. As long as price action remains above our ascending trend line, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, with a buy position currently running over the weekend, I'm looking forward to price action taking out all the sell positions around the $2,005 area to give me an opportunity to add more buy positions to my existing trade. So what this simply means is that I am holding on to a bullish bias with the hopes that price action will be breaking out of the $2,005 area, where we shall be looking out for new buying opportunities. However, in as much as we're looking out for buying opportunities, you know how we do it in this community. We usually keep tabs with the opposite direction as well. And of course, we do want to know what are the possibilities that sellers have here to push price to the downside. And of course, while we're reviewing this current market conditions, remember that we talked about how the $2,005 area had been a strong selling niche in this market for a very long time. As you will see here in the month of October, it was a selling niche here. We saw how it was difficult for buyers to break through this level at every point in time price action gets into that area. Now, if this character here persists in the coming week, of course, we will not want to ignore that price could still drop to the downside. And if it does, what do we want to see that will make us feel comfortable changing our bias from bullish to bearish? Well, since we already have an ascending trend line here, we will need price to break down that ascending trend line for us to capitalize on a downtrend move. And what I will be looking out for is the breakdown of the ascending trend line, and if I can see a breakdown of the $1,990 level as well, this will give me more confidence to join a sell move. Now remember that we will need some confirmations to happen, like a retest of the 1,990 or the retest of the ascending trend line to give us that comfort to join a decline to the downside. So this is what we will be looking at for this week, as our center of focus for this week is basically between the 2005 and the $1,990 level, where the direction of the breakout will give us an insight into where price action will be going. But trust me, I will be with you in the comment section of both my TradingView and all other platforms to give you updates on how I will be taking advantage of the next move after monitoring how participants in the market will be reacting to this current structure during the early hours of the new week. If you found the content helpful and useful in making your independent trading decision for this week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial to them too. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.